how do you make money from actually investing in shares, whether listed on the Johannesburg Stock Exchange or any other exchange in the world. And it's actually quite a simple answer, so I'm not going to be that long, but I'll actually just give you a little bit of a rundown on actually how that works. So let's get right into it. The first way that you make money from investing is actually quite basic. It's the classic buy low, sell high. But what is really meant when someone says you should buy low and sell high? It's very simple. All you're really trying to do is predict that if I buy the stock at this particular price today, will somebody else in the future wanted to buy at a higher price, all right? So let's say it's a company that share trades at 10 rands a share. You have to ask yourself, in the next year, 2, 3, 4, 5 years, however long your investment horizon is, will somebody want to buy this particular share at a higher price than what I'm paying today? And if that's the case, then that makes it a good buy. If that's not the case, then it's necessarily not a good buy. Because you can buy something at, say, 10 rands a share, and in 2, 3 years, there will be people who want to buy it, but they want to buy it at 5 rand a share, which obviously doesn't really help you because you will end up selling it at a lower price than what you actually bought it for, which is not very a good way to approach it. The second way that you make money is simply by just buying stocks that pay out dividends. There's a few in South Africa that have been very consistent over the last 10, 15, and 20 years. So you can look at ShopriteTech, Capitec. They generally pay decent dividends, not the highest. So you're not expecting, say, 12% or 15% dividend, but you're going to be getting consistent returns over your holding period. And odds are those are the type of shares that will increase in value as well. But with earning dividends, you must be careful. There's something we call a dividend trap, and that's basically when you buy a stock looking at the yield, so the yield being a percentage representation of how much money you would make based on the particular share price. So if the share price is 10 rands and the yield is 10%, then that means that stock pays a dividend of 1 rand. Why? Because 1 rand is 10% of 10 rands. Simple maths that way. So the thing you should be careful of, like I'm saying, is the dividend trap, which is when you buy stock because it pays very well, and then over time it loses value. So that share you bought for 10 rands, paying a 1 rand dividend loses value, let's say, to now 5 rands, meaning it's lost 50% of its value, even though the dividend is now like 20%. It looks good, but actually on paper you've lost a lot of wealth. So that's something to be very mindful of. But nonetheless, buy stock, get paid your shareholder salary, and I put that in inverted commas, which is a dividend. The third way is to buy preferential shares. Preferential shares are shares that have characteristics of equity and debt. So when you buy them, you're technically borrowing the company money, but you're also taking a stake in terms of owning that particular company. So that's where what happens is you get paid a fixed dividend. And if the company was ever to be liquidated, you'd be paid prior to the common shareholders. So generally, preferential shares will pay obviously a fixed dividend over the course of their lifetime. So while you hold, you know you're guaranteed a particular income. And of course, they can also increase in value and you can sell them at a higher price. The fourth way, which is sort of a bit nuanced, but I'll mention it, is you can actually borrow against your assets, your listed assets. So we've been seeing Easy Equities doing customer surveys where they've been asking if people are willing to borrow against the securities that are in their account, so the shares that are in their account. And probably by next year they would have launched the service, and so that will be a good way for a lot of people to invest. So say you build yourself a nice portfolio and actually borrow against that portfolio and use that money to make more money, right? So don't use that money to consume, but rather use that money to actually buy things that will benefit you and that will make you income. So those are the 4 ways that you can actually immediately start making money whenever you buy stocks in the market. So that's it for today. Thank you for watching, and subscribe if you're watching on YouTube, and follow if you're watching on IGTV. Thank you. Bye.